XII Union High School and Junior College, Pune. Economics, Standard 12th. Presented by Dr. Inderji Kaur Ahluwalia. Chapter 9, Money Market and Capital Market in India. Part 3. Structure of money market in India. The money market in India is divided into two parts. It comprises of both the organized sector as well as the unorganized sector. The organized sector includes the Reserve Bank of India, that is RBI, commercial banks, cooperative banks, development financial institutions, and Discount and Finance House of India, that is DFHI. The unorganized sector, on the other hand, comprises of indigenous bankers, money lenders, and unregulated non-bank financial intermediaries. Organized sector. The organized sector of the money market consists of the Reserve Bank of India, commercial banks, cooperative banks, development financial institutions, and Discount and Finance House of India. In the last video, we have studied about the Reserve Bank of India and its functions. Today, in this video, let us now discuss the commercial banks, which is an important constituent of the organized sector of the money market in India. Commercial banks. Commercial banks act as intermediaries in the country's financial system to bring the savers and investors together. They are profit-seeking financial institutions. Acceptance of deposits and granting loans and advances are the primary functions of commercial banks. Commercial banks play an important role in mobilizing savings and allocating them to various sectors of the economy. It includes both scheduled commercial banks and non-scheduled commercial banks. Scheduled commercial banks are those included in the second schedule of the Reserve Bank of India Act 1934. In terms of ownership and function, commercial banks in India can be classified into four categories. First, public sector banks. Second, private sector banks. Third, regional rural banks. And fourth, foreign banks. Popular definitions of commercial bank. First, definition given by Banking Regulation Act of 1949. Banking means the accepting for the purpose of lending or investment of deposits of money from the public, repayable on demand or otherwise, and withdrawable by check, demand draft, order, or otherwise. The second definition given by Professor Karen Cross. A bank is a financial intermediary, a dealer in loans and debts. Let us proceed to understand the functions of commercial banks. The functions of commercial banks are divided into four important functions. First, acceptance of deposits. Second, providing loans and advances. Third, ancillary functions. And fourth, credit creation. The bank accepts two types of deposits. First, demand deposits, and second, time deposits. There are two types of demand deposits. First, current account, and second, savings account. There are two types of time deposits. First, recurring deposit, and second, fixed deposit. Let us understand each function of the commercial bank in detail. First function, acceptance of deposits. Deposits constitute the main source of funds for commercial banks. Savings lead to the creation of deposits. Deposits are categorized as demand deposits and time deposits. Demand deposits. Deposits that are withdrawable on demand are known as demand deposits. They are in the form of current account and savings account deposits. Current account. Current account is usually opened by businessmen, corporations, industrial houses, trusts, etc. They are provided with overdraft facility. Overdraft means withdrawal in excess of the balance in the account. Savings account. Savings account are operated by a large number of people, particularly the salaried class, small traders, etc., who wish to save a part of their income with the bank. Time deposits. Deposits that are repayable after a certain period of time are known as time deposits. They are in the form of recurring deposits and time deposits. Recurring deposit. Recurring deposit refers to a deposit wherein a customer deposits a fixed amount at regular intervals for a specified period of time. Fixed deposit. Fixed deposits refer to a lump sum amount deposited by a customer for a specified period of time. Compared to all other deposits, fixed deposits carry a high rate of interest. The second important function of the commercial bank is providing loans and advances. Commercial banks mobilize savings and lend these funds to institutions and individuals for various purposes. Based on the tenure, loans include call loans, short term, medium term, and long term loans. Longer the duration of the loans, greater will be the rate of interest. Besides this, banks also provide cash credit, overdraft facility, as well as discount bills of exchange. The third important function of the commercial bank is ancillary functions. Commercial banks also provide a range of ancillary services such as transfer of funds, collection of money, making periodical payments on behalf of the customer, merchant banking, foreign exchange, safe deposit lockers, demat facility, internet banking, mobile banking, etc. The fourth important function of the commercial bank is credit creation. Credit creation is an important function of commercial banks. Commercial banks are creators of credit. Demand and time deposits constitute the primary deposits of banks. After meeting the reserve requirements, out of the net demand and time liabilities, the balance amount is used for giving loans. Thus, secondary deposits or derivative deposits are created out of the loans given by the banks. Illustration or example. For instance, when the bank provides loan to its customer, the loan amount is credited into the bank account of the customer. The bank that receives the loan amount as a deposit keeps aside a certain portion in the form of reserves. After meeting the reserve requirements, the bank lends the remaining amount. This procedure is followed by the entire banking system in the country, leading to creation of credit. In short, commercial banks create deposits out of the loans given, thereby leading to credit creation. Thus, every loan creates a deposit. This is how the credit creation process is done by every commercial bank. The functions of commercial bank can be illustrated with the help of this illustrative figure. Firstly, we have accepting of deposits and then granting loans and advances. These two are the primary functions of every commercial bank. Besides these two functions, we have seen that commercial banks also perform ancillary services and create credit. Thank you.